Hey everybody, welcome back to another Sunday Sessions video. Hope we're all well. As you're going to hear a bit later on in the video, Luke will explain, we have actually moved into a new place and we've had a nightmare because we don't get Wi-Fi until next week, and we weren't made aware of this, but we actually don't get service anywhere in the house other than one small region where we get one singular bar of 4G. So we're trying to make do with what we've got. What I've done is I've actually gone out and done my analysis somewhere else. And taken screenshots of it, and I'm going to run through the screenshot. So I hope that is good enough. I hope that that still is a good substitute for what we would usually do, and hopefully you still completely understand my bias from the pictures. So starting off here on the euro to the US dollar. Now I've started off here on the 1 day time frame just to remind ourselves of that higher time frame bias, and obviously we understand, as we can see by this 1 day break of structure, we have recently invalidated the fractal bearishness that we can see within this. So we've invalidated that, which means that we are creating the impulsive wave. Obviously, in the scheme of the 1 week time frame, this entire move was seen as one impulse lower. However, for an impulse to move lower, there has to be a downtrend that takes that impulse lower, because price simply does not move from A to B in a downwards fashion in one straight singular move. It has to have certain types of structure, follow certain types of structural laws in order to do that. Now, one thing we can notice is because we've broken that 1 day bearishness, therefore breaking and penetrating a protected high, we have therefore confirmed the creation of the correction on the 1 week time frame. Now, we have a few zones higher up. We also had this zone very close to price that represented a buy to sell region, therefore an unmitigated zone within the markets. We had price tap in, we see we're having rejection, and this is where we'll then head down to the lower time frames to see exactly what is going on inside of there. The one thing we need to note first though is we obviously have a couple of demand zones lower. Now the reason why I've got those drawn out is because, as I said, we have some supply zones higher up. Now that is an indication that this correctional wave is not ready to be formed until we potentially have mitigated the zones higher up. We need to analyze what the supply and demand balance looks like as price rejects from this region. If we see that there's a lot of volume to the downside, therefore a lot of supply in the market, we know, okay, maybe we don't need to concern ourselves with these demand zones too much because there's a lot of supply. However, I've got them identified because they do, on a lower time frame, represent valid unmitigated orders, such that when price approaches, we should at least be cautious in case it does make any sort of difference. Okay, so now we have come on down to the 4 hour time frame where we can see that as we entered this region, you can't see the wick because the box hides it, but we created a vast area of liquidity. There's a wick that comes up to that region right there, comes to clear that liquidity. We also left over a supply zone from that liquidity clearance. Price then, again, built more liquidity. We ranged for a while over that festive period when there wasn't much liquidity in the market at all. We then see price came up. We tap into this region, we start breaking lower. When I back tested in a video I sent to the VIP chat, we actually potentially found, given we were at the market at the time, but we did manage to find 2 sell entries. One, I believe, with a 6 pip stop loss, the other with a 5, and that was accounting for spread. So we added a pip or 2 pips on top of that to account for spread. If we'd refine those, we were looking at 3 pip stop losses, and these are running, I believe, I think it was 60 RR if it runs all the way, and peaked here at about 30. So if you were able to find those positions, if you were watching the market as it tapped this zone, and I called this zone as we were heading in from last week, saying that we need to watch it as an area of interest, price reacted from it, we had the move lower. Moving forward, yes, we had the fractal break to structure up here. We've also had the higher time frame break, which now confirms that we are invalidating bullishness to some extent. So we've broken down. We have then started to create some bearish structure. We see that price has made this sharp move up, which I'm hoping is to come and mitigate this supply zone. If so, and we see the reaction from that supply zone, A, it gives us an entry, but also B, it is very good as it shows that supply is taking control, and therefore our bias of getting involved in sell positions longer term is actually very valid. What we have behind this is now the 15-minute time frame. And we can see that as prices come up, we see a very clear buy to sell region that is representing the region that holds valid supply because it's holding an institutional buy order that needs mitigating. As prices approached, even though we had high volume to start, we see we're starting to get rejection as we approach. And then we've hit this region where we've had perfect rejection, breaks to the downside, some volume introduced. Now, I know when I like to see a reversal in the market, we like to see it institutionally controlled, which means that we want to see a clear Wyckoff distribution. So liquidity built, liquidity cleared, break of structure to the downside. We haven't been delivered that yet. Price is still holding in this region. So we just need to see how it reacts entering the new week to see if a reaction from this zone is valid. If so, that's a sign that we are going on the sell side longer term. If we blow through this, we continue higher, then we know we're still within the correctional wave of that higher time frame. If we go back to it, and we actually need to make that move higher to target the supply zones higher. Okay, so now moving on over to the US dollar, to the Japanese yen market. I'm quite liking what's going on here as we've recently had some relevant price action. Now, this is on the 1 day time frame again, and we see that obviously we have just finished the creation of a very, very long-term bullish move in the market. We have started to break to the downside. Maybe quite difficult to understand exactly where the structural points are. However, I would argue that, yes, we've had impulse correction. I would say that this acts as an impulse and then a correction, as this move, that should be a protected low. We've penetrated the protected low. And I believe when we actually break fractal structure is when we can count it as a correctional wave. That's happened. Therefore, the break of that low should represent a break of structure to the downside, the creation of the correctional wave. We see that we've been trading down with very high volume and therefore leaving 1, 2, 3 major supply zones over in the market that I believe need mitigating. Now, the reason why this is relevant is because as we then look on the 4-hour time frame, we see that within the bearishness that was trading us down, we've recently had a break of structure to the upside. Obviously, demand's being introduced in the market. Therefore, we'd like to see that correctional wave come back up to trade us into and towards, if we go back to it, these supply zones higher. So this break of structure, to me, confirms that we could now be seeing a move back up, tap one of these zones, introduce enough supply to then move lower, which longer term we'd like to see this demand zone tapped, mitigated, and cause that reversal to continue bullish longer term. That may not be the case. Maybe price breaks structure here. We then just continue higher for a very, very long time, invalidate these, so on and so forth. So what I am going to be doing, which I do not actually show here, because there's not that much of nice structure yet, but moving into the coming week, we will start looking for buy positions. Given that we expect price to now follow this and continue higher, the reason why it's going to be wise to get involved in buy positions is because either we are going to profit from price moving up into one of these zones where we will then take profit when we see price tap and start showing signs of rejection. However, if price actually invalidates these, which there is a chance it can, we are still involved in a buy position that we can then look to profit from longer term. Therefore, we are actually situated within a position that accounts for any possibility, covering all tracks, covering all bases. Now we will go on over and we shall look at the Bitcoin to the US dollar market. Now, the reason I want to have a quick look at this is because I want to suggest my own outlook and my own bias on this market, because I feel like not a lot of people have actually looked at this from a smart money concept standpoint. Now, I know a lot of good traders who also are looking at this 12,000 region as holding relevance. Now, we have to understand that this market is undergoing a very, very natural cycle that pretty much all new booming markets do. Now, when something becomes a bubble, so to say, and I know Adam Coe has actually done quite a lot on bubbles, the importance of them, the cycles of them, so on and so forth. Now, typically what happens is obviously it starts off at zero. It has a very, very slow rise because it's not very popular, so on and so forth. We start to create a little bit of structure. There's some popularity coming. There's things happening that are bringing it into the limelight, things happening that make people pull away. And then suddenly it enters that bubble phase. It enters that booming phase where it absolutely takes off. Now, as it's taken off, not many people are really getting involved because they're still just seeing this as it's a regular market, it's holding within this range. I would say it's not until it surpasses that sort of $22,000 mark that people start to think, okay, maybe this is worth investing. And then it continues higher, continues higher. The higher it goes, the more traction it gains, the more people that are looking to get involved. And actually, what is really funny about this is it isn't until the very peak, around that sort of 50 to 60,000 region, where the majority of people are involved. Why is that? It's because people always get involved in this late. And the institutions know that and will therefore know, okay, we've now hit a region where everybody's really pumping in money. Let's troll them all. Let's reverse the market, bring price lower, liquidate them all, manipulate them into losses so we can profit. That is the main motive of the smart money operators, the composite man, the institutions, whatever you know them by. This is a prime example of that happening. So we see that we actually firstly delivered a correction wave back down, an impulse back up. It was following clear bullish structure. So people were expecting it to continue, hold that low, continue higher, which is valid because we even had signs that we came down, we're reversing higher, getting ready for that next impulse. However, we have to understand that within this entire region, there's so much liquidity, there's so much people getting involved. There is so much, option for the smart money operators to manipulate people into losses. This is a gold mine for them. There is so much liquidity there that can be manipulated, that is ready to be manipulated, and they've gone ahead and done that. Now, this is why it is so important whenever you invest money in anything, whenever you get involved in Forex, crypto, stocks and shares, you know the ins and outs of that avenue, because there's things like that. There's ways that the composite man, the people that lie behind the shadows, are always going to find a way to manipulate you. And therefore, if you do not understand the game, the way they play it, you are simply going to be that person, that pawn within that game that is getting sacrificed for the greater good. So that is pretty much going to wrap everything up. Watch this 12K zone as we head down, as it is representing an unmitigated order, which I believe is the traction for price to come this low. So keep an eye on that. But overall, thank you for watching my segment. I will now pass you over to Luke, who will show you some of his own analysis.
How are we getting on, people? I hope you're all okay. I hope you've enjoyed James's segment there and the pairs that he has gone through. Today's Sunday sessions is a little bit different, just due to the circumstances that we're in at the moment. We've just moved properties, we've just got a house or a place in Manchester, and we are without Wi-Fi, unfortunately, so we are having to do it in weird situations. I'm currently sat outside of our property because where, you know, what we've got and what we've bought is actually an old paper mill, so there is literally no service at all inside the property, and we're still waiting for Wi-Fi there. So I'm currently sat outside. As you can see by the timer at the bottom here, it is 10:10 in the evening. It's the peak of winter in the UK, so it's absolutely freezing, but priorities, you got to do what you got to do. So I've got 4 pairs for us today: XAU USD, AUD USD, Great British Pound to the US dollar, and the euro to the US dollar. I'm going to fly through these pairs as quick as possible, giving you guys some zones and areas to work with, and then hopefully you can apply that to your own charts and to your own analysis and profit with the LAGFX team this coming week. We had a very profitable week last week. We placed 2 positions on the markets and they were both successful. This was due to the help of the fundamentals that came through with the US dollar. We did have the US payroll, the US dollar appreciated, and we were actually selling into those currencies where the US dollar was a quote. So it meant that the pairs that we were looking at obviously generated us with some brilliant returns on those sell positions. Anyway, let's jump straight into today's analysis. So as we can see on screen, we've got the XAU to the US dollar market. We have seen that this market has been very bullish as of recently, putting in this bullish leg. This is just a correction in my eyes, because as we can see, price has been creating a lot of bearish structure. This marks an extreme higher time frame structural low. So we are seeing that price is putting in these bearish legs, taking us lower into the market. And as we can see here, price has broken structure to the downside, confirming that further bearishness is to continue. Now, what I've done here is I've marked out 2 zones. So if you haven't marked these 2 zones out yourself, pause the video and mark them out, because these are going to be areas that we can actually look to trade from. We can look to place sell positions from these zones, assuming we are delivered with the right confirmation and confluence in order to do so. We've seen that price has put in good volume into this zone here. What we want to see ideally is for price to penetrate this zone and deliver us with a break of structure to the downside. This would then confirm that this bullish correction has finished and the next bearish impulse is ready to take place, and that is when we can look to get involved in those sell positions. So as I said, mark out these two zones for yourself: 1872 to 1879, and then 1937 to 1959, and then we'll look to actually sell from those hopefully this coming week. Moving over to the AUD to the USD market, this is one of the pairs that we actually placed a position on just last week. As we can see, we came away with 115 pips, 16 RR, which is nearly 32% if you're risking 2% of your equity, which is what we're doing. What we've seen is price actually come back up to sweep this higher time frame supply zone. I believe that price is going to put in that next bearish leg and hopefully deliver us with our take profit target here, and we're going to see, you know, higher time frame structure break and hopefully a new bearish leg. So if we see a break of structure take place from this impulse, or this correction, should we say, this fractal corrective wave, if we see a break of structure from this and the deliverance of bearish structure, then we can look to actually sell into this market. I did have a more refined zone, but we've seen that price has actually started to trade above that. So if we see that price starts to trade lower, breaking that structure, we can look to get involved in those sell positions once again. Quickly moving over to the Great British Pound to the US dollar market, we've seen bearish impulse taking us lower. Perfect. We've broken structure on the lower time frames and the higher time frames. We are now seeing price put in a corrective wave. Price needs to put in these corrective waves to pick up more supply in order to continue pushing the market lower. So that's what we are seeing here. So I've got two zones highlighted. If you want to highlight this zone for yourself, by all means do so. We're looking at this price bracket for price to tap into this, inject supply into the market, and push price lower, creating that new impulsive wave taking us lower. I also have a more refined one, although I don't feel like this zone itself will be holding enough supply to completely flip the market. It may give us some temporary bearishness where we can look to place scalp-like sells, but ultimately I will be looking for this higher time frame supply zone here. So as I said, mark out this zone for yourself, wait for price to tap into that, and also mark out this zone as well for maybe some scalp-like sell positions. And again, if we just zoom into this market, let's just go down to the 30-minute. You'll see here, this was another position that we placed last week. This generated us with a lovely RR over 1 to 4. So if you're risking 1%, you're looking at 4% returns. If you're looking at 2% risk, we're walking away with 8% returns on that position. So brilliant trade. Wasn't a hefty trade, wasn't a big one, but it was one that we took and we took full advantage of. We could have escalated our take profit and probably taken our take profit target away and just let the price run, but we like to walk away with take profit targets being achieved every time. So you know, we stuck to what we thought was a healthy amount just above this structural low here, as you can see. I always do that with my take profits and stop losses. I always put them above or below structural points, and that's what we did here, and we got a take profit achieved on that. So that was brilliant. That was on the basis that price tapped into this potential sell zone, started delivering us with bearishness, as I always recommend, and then we just got involved in a bearish leg, you know, the impulse taking us lower. But yeah, looking for sell positions in this market, we just need to wait for price to tap into a valid supply zone, and then we can look to get introduced into this market. Moving over to the Euro US dollar, this was a market that I was looking to get involved in last week, but then we got hit with the US payroll, which ultimately delivered us with this huge bearish influx, taking us lower into the market. Price has now recovered from that and continued trading us higher, and we are seeing it just sit below this potential sell zone. I wanted to see price actually tap into this so supply can get injected into the market. As you can see, this is highlighting a last buy to sell region, one that had been left unmitigated. There was a lot of inefficiency that was left over as well. We want to see price tap into this, deliver us with a break of structure to the downside, for price to start trading bearish, and then we can look to get involved in those markets. So just so you guys understand what that may look like, we want to see price tap in. It's set a structural low. Price maybe go on to set a lower high. This is our first suggestion, that price may be ready to start trading bearish, and then we'll be delivered with a break of structure. How is this a break of structure? Because price has gone on to set a lower low in terms of this, because this was the last structural low. Price has then set a lower low. Then we may see the deliverance of a lower high being created again, and then that's when we'll look to get involved, and then we can trade that market lower. So this is what we look for. We have a high created, a low created, a lower high created. This is our first suggestion. We then have a break of structure, this being the break here. Then we have the deliverance of a lower high. This is where we get involved in the market, and then we trade price lower. So that is my analysis for this week. It has been quite quick and quite brief. As I say, I'm outside. We've got some crazy circumstances at the moment, but we wanted to ensure that we got a video out for you guys, as we feel it's extremely important. What I will be doing is going to Wi-Fi cafes this week and just and trading during the day. So I am going to be restricted to one screen, unfortunately. I'm not going to be at my desk, but you got to do what you got to do, I guess. Now you might be wondering, well, why don't you just use your mobile data on your phone and connect it to your hotspot on your laptop? As I said, we have no signal at all in our place. So yeah, I hope you guys have enjoyed this video. If you have done, please leave it a thumbs up. All the support you guys provide is very much appreciated, and we will catch you guys in the next Sunday session.